Good morning and welcome to the Quantum Leap Futures Morning Leap Session for Wednesday, December the 28th, 2016. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live sessions to take a look at the market macro to micro. Take a look at the structure of the market, then we drill down to our trade levels, our targets, and our hypotheses for the day. We create four main hypotheses for the day. This gives us a plan of action no matter what the market throws at us, and then we look for clues that the market gives us to adopt which plan we're going to trade against what the market is showing us. This is a subscription room. If you're interested in checking it out, please send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog, this is not a commercial venture. Read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so let's take a look at the news quickly. There isn't a lot of it. The only thing we've got really today is pending home sales at 10 a.m. Eastern time. Other than that, it's going to be a really light news day. There really isn't a lot over the next, what's going on? Great. There isn't really a lot going on in the next couple days in terms of news. The big one is going to be the unemployment claims tomorrow and crude inventory. And Friday there isn't anything. So tomorrow I think is going to be the big day that could be affected by news. But right now, we just are stuck in this balance right here. Yesterday, our main hypothesis, man, what is going on with my charts? Yesterday, our main hypothesis was a open auction out of range, a move down into testing the 60 to the 57, 56 area, then finding responsive buyers and working our way up. Hypo 2 was an open auction out of range, a move up into 64 to 66, and then rotate down towards the 57. Hypo 3 was an open drive or an open test drive, come up into the 64, 66 area, and then go push through, test the 69.50, chop, and then break and put in a new all-time high. We kind of looked like we were going to get Hypo 3 for the whole period here, and we had a long discussion yesterday afternoon about whether or not you want to get short or long and waiting for the evidence. And what we were waiting for and the evidence that we were looking for is a break below the 64.25 fractal, because we put in a lower fractal high and a lower fractal low. We wanted to see that lower fractal and then put in a lower fractal high before rotating down and breaking through the 64.25. And we finally did. I didn't trade this whole period here because there was no edge. It was boring. And then finally, once they broke the 64, I was able to get into the short to break the ID low to the downside. And then we came right down to the prior day high and the naked close at 60.50, and we basically closed on the low. So we were looking for some extension overnight because we closed and created a weak low, and we were testing this range. But sure enough, in the Globex session, they opened up and they held that prior RTH, and they rotated up. And they come up and they put a double top up here. No, they didn't put the double top. Whoops. Oh, that's because it's the 30 minutes. Yes, they haven't put a double top. I don't know what's going on with my my charts right now. I've got to flip this over to a 5 minute. Just give me a second here. Oh, I thought it was a double top. Yeah, it was right there. There's the double top right there. So we have a double top at 67. We got a VPOC shift up to the 66 area. This coincides with that 6650 value, the prior microcomposite VPOC. Now, yesterday's high was 6950, and that put in a double top at 6950 because last week's high was 6950. So we're creating a weak high. I still believe that we're going to see new all-time highs before the end of the year, but we continue to see some weakness, some resistance coming in. So let's take a look at the picture, macro to micro. You can see that we've got, I look at the candlestick chart with the 9 EMA, 20 SMA. I'm looking for slope and separation, strength of the trend, where the trend is being challenged or violated, and where we're getting continuation, and any other chart patterns or candlestick patterns that might be of interest. We had this beautiful multi-year upward trend challenged at the end of 15, beginning of 16, took back, started to get slope and separation, had the following 3 candlestick pattern on the monthly, which is a continuation pattern. We'd break the high of that and go and put in a new all-time high. And we've got slope and separation. The trend is very strong on the monthly. On the weekly, we are one time framing up on the weekly. You can see we've got higher lows on the weekly. We've got good slope and good separation, and we're creating a symmetrical triangle, which could be a flag pattern. And if I wanted to just take a quick look at the flag pattern to give us an idea of what the measured move would be, this being the flagpole, this being the flag. I always take my my measurements from the apex of the flag. Not the way everybody does it, but then I would go from here, from the start of the flagpole up to the apex, and this will give me a relatively good conservative measured move, and I always go to the 61.8 as my primary, and this gives me a target of 23.21 in a quarter. So we have a flagpole measured move up to 23.21.50 if we break out to the upside, of course. The 100%, which most people strive for, I think the 100% is more of a bonus. The extended target on this is 23.55 and a quarter. So those are 2 measurements. And if you want an interim measurement, the 31 point, what is it? 2300. So there's your first target, your primary target, and your extended target, and they're all showing that we'll test into the 2300s. Now this is on a weekly, so this does not necessarily mean that we're going to hit it this week. It's just a larger time frame drawing, but the trend itself is very much intact. The thing that bothers me a bit is we do have this this technical gap against the 9 on the weekly, and on the daily we're starting to see some responsive selling coming in, but again, we can't seem to to go for the breakout, and we can't seem to break down. Price is still holding above the 9 and the 20. We do have slope and separation. We're losing a little bit of slope, but until we break below the 57 area, we still have to consider that this trend is not being challenged on the daily, and the move is still up. Going to the intraday, you can see that we are starting to get this this upward trend going now. Price is paralleling 9 quite nicely. There is a naked cross all the way down here at 59.50. So if we don't hold above the 63 area, you could target that 59.50 as a possible target. Remember, naked crosses and chart patterns are all related to the time frame that they show on. In fact, we've got a bit of a cup and handle pattern with a inverted head and shoulder right here, but I'm pretty sure this is already played out. I do want to just take a quick look at this though. I want to see if this would be validated, and it is validated, so it came back in within the 38.2 and the 61.8, and now we're coming up, and it's a skewed rim line, but that's okay. In fact, you could take it from here on the double top, which is not skewed. Any break above there, let's see what the measured move looks like on that. Again, I don't go to the extreme bottom. I always try to give conservative measurements so that we don't come within a couple points or a point and then and fall away. So this is saying 2279.75 for the primary, and for the extended 2286 and a quarter. So watch any breaks above the rim line. This is showing us that we have a measured move up into new all-time highs at 2279. In fact, the 38.2 is also above the current all-time high at 2273. So just keep an eye on that. Again, it's on the 4-hour. You have to remember which time frame it's in, and it's got double confirmation here because you've got the cup and handle, plus you have the left shoulder, the head, the right shoulder. Now the measurement wouldn't be as high because the neckline would be down here in around the 61, but just shows you that this market still is showing that it's got upward skew to it, and the risk is to the upside right now. Going to the 1 hour, you can see that we are starting to get slope and separation on the 1 hour, and price is paralleling the 9 quite nicely. Going to the 30-minute, again, good slope, good separation, good price paralleling. There is a naked cross down here all the way at 2263. I would be looking for that if we got below the 65. And then going to the 15-minute, again, trend is up. Going to the 5-minute, trend is up. So pretty much every time frame is still looking up. But let's just put it depends on this for a minute. If we look at the larger picture structure, you can see here that we're getting hit with we shifted our microcomposite VPOC back down to the 57. It was up here at the 66.50. It shifted back down here to the 57. We held value there, and then we tried to come up and get back inside of this value yesterday, and the sellers stepped in, okay, and we closed, okay, just above the range high of this 2-day microcomposite, and right on top of Friday's range. But overnight, they've taken it back again, and here we are trading up into the 66.75 area. The value area high of the longer-term microcomposite, that value area high is 66 and a quarter. So I'd be watching the 66 and a quarter very closely, because if we can stay outside of the value area of the microcomposite, we could remain in price discovery. What we have to also consider today is we've got this selling wick with a very blunt profile that really doesn't have, it has what we call undetermined fair value. There's no real dominant price point or price acceptance here, and therefore one of our hypotheses today has to be, do we get stuck in the wick as we further the auction here and accept price before we either break down or continue up. So one of my main hypotheses will be getting stuck in the wick here. Key price points to keep an eye on, obviously 60 66 and a quarter, the 60 and a quarter, whether we hold above the Tuesday range and stay inside of yesterday's range. Anything below that, I'm looking for the move down to 57. And then we can see if we can find buyers there again, or whether or not they have to come down lower. Where we started this whole thing with the breakout was right here at 49 and a quarter. We've come back and tested that several times, so that will be also a point. We're hitting that 67 again. We're creating a weak high. Did we go and put in a new Globex high? We did 67.50 as a new Globex high, with 69.50 double top in last week's high, and this week's high to be exact, is sitting there at 69.50. And you can see that right now we're coming up into the upper channel of the Keltner, and the upper Keltner line is at 69.50. 67.75 is R1 for the daily floor pivots and resistance and support. Our floor pivot is down here at 62.75. So right now we're testing that first resistance level and trying to break through. So let's take a look at our overnight session, start moving our numbers over. Obviously, we could put in a new overnight high very easily at above 67.50. I'm going to put it in there for the time being. We'll just have to watch. And you can see that we have an LVN and our value area high sitting right there as well. So not only will this become a target, this is definitely going to be a trade level for me, because it puts us up into the upper distribution where the VPOC was most of the day yesterday before it shifted down into the close, and then I'd be targeting the week high. I mean it as week as weekly as in time, and week as in strength, because it's a double top, and double tops to me are weak highs. And then above that, I will be targeting the 73. Our daily ATR is continuing to tighten up at 1674 today. What was it yesterday? Yesterday it was 1671. It actually expanded by a couple ticks, but no big deal. So off of the bottom of the Globex at 60.50, our daily upside ATR, 20 period ATR full session, is shifted up to 77.40. Which would be 77.25. And then we have that measured move, forgot to write that down with that measured move. I think it was 75. Stupid me, why didn't I write it down? Great drawing tool. $22.76. Actually, I'm going to use $22.75.75. Okay, so $22.75.75. Do it this way. And then we know that the 2300, and I'm not going to worry about that today. is I'm not expecting to go that far. So our overnight low is down at 60.50. This is also going to be a trade level for me. 62.50. We've got 62.25 LVN. We've got these two LVNs right here, one at 64 and one at 62.25. I'm going to use the 62 area altogether. The open from yesterday was 62.50 for the RTH session. And then there's this little LVN right here at 64.50 and the 64. So I'm going to be watching that area. If we come down into the prior day, take out the naked VPOC, I'll be looking for them to bounce from here. But if they don't and they break through the 64, then I'm looking for them to come through to test the value area low as an 80% destination trade and possibly come down and test the naked close in the range from the prior day. We've got a little bit going on here. We've got a range high, a range low, a naked close, for 2 different days, and we got our overnight low. So this is going to be a bit of a slush area for me. I really would want them to break below the 59.75 before I'd be targeting that 57. And then below that, we've got 54, the range low. And then last week's low down at 51. And our downside daily ATR target right now is at 67.50 minus the 16.74. So that takes us down to 50.75. And then, of course, the next big target below is the key line in the sand down there in the 41 area. I don't think that's really going to come into play. So overnight inventory is net long. Okay, what do we mean? That the inventory, most of the inventory is long, meaning that we held the open and they're building value higher. Our microcomposite VPOC is at 66. Sorry, not our Globex VPOC is 66, which is just above the naked VPOC. Post 66, which is from just above yesterday's naked VPOC. And again, a lot going on in this area right here. So the key is today, in my opinion, how we handle the open. We're going to be opening inside of range and inside of value, and we're likely to see some wide trading ranges, some wide rotations. I do expect that the overnight high is going to get taken out and tested very early on, and we're likely to test down and take out the naked VPOC as well, and test the 64 level, maybe even down to 62. So the overall for me is still to the upside. So Hypo 1 is an open auction in range, a move down to the 65 to 64 level, maybe even the 62. Then I'm looking for responsive buyers down here between the 65 to 62 area, and then rotate us up through, break out of value, come up and take out that double top at 69.50 and push through, okay, up into the 73 and put in a new all-time high above 73. So Hypo 1 is open auction in range, a move down, find responsive buyers, then start walking our way up, break the week high at 69.50 and push through to 73 and put in a new high and close somewhere up here between the 77.25 and 73. And I'll be targeting any break above 73. I'll be targeting that first 38.2% target of the cup and handle measured move. Hypo 2 will be an open auction in range, failure to break out of the 69.50 or a false breakout, and then basically just chop between, okay, the 57 and the 69 area and get stuck in the wick. And just, determine fair value here and wait for the shift of the microcomposite VPOC up from 57 back up to the 66, 65 area. So Hypo 2 is an open auction in range, failure to break out of the prior day or a false breakout, find sellers, and then come and just chop around and get stuck in this wick with maybe a late day probe down into the 59, 57 area, but basically just a rotational day. Hypo 3 is a open auction in range and a failure to break out, come down, fail at the 60, push through down to the 57, chop here, and then push down and close somewhere down here in the 52 area and down where that 52.75 was, the 53 area, where the microcomposite VPOC was early on in this balance zone. And people would say, well, why wouldn't my Hypo 3 be a trend day? Just because of light volume, but put it this way, my Hypo 4 is a trend day up, and I would give it pretty much equal weight to whether or not it would be Hypo 3 or Hypo 4. I'm betting more on likelihood of seeing a Hypo 1 or Hypo 2, but my Hypo 4 would have equal weight of probability to a breakdown day or a breakout day. And Hypo 4 would be basically an open auction in range, failure to get below the 62, breakout early, come up into the 73, chop in the 73, and then push through, okay, coming up into the 77 area, chop around here, and push up into the 80s and close somewhere up here in the 80s. Low to mid 80s, and that would be very similar to my Hypo 1. The only difference between Hypo 1 and Hypo 2 is that we'd get more extension and break above the daily ATR target and get a range, what I call a range breakout. What I mean by that is our daily ATR has been continuing to compress, and I'm expecting on Hypo 4 that we have a larger range than our 20-period daily, which is that 1674, and start expanding that range back out, as we've gone from, like, in our, what was it, just about a month ago, well, beginning of the month, our daily ATR was running around 24 points, and we're compressed down to 16.75 points. So anyway, it's a little bit long-winded this morning. I didn't mean it to be that way. Just trying to be very clear on what my reasoning is for all of what I'm looking at. The risk is still to the upside, so be careful trying to short this market right now. Make sure you got, like we did yesterday, we had positive confirmation that there was actually weakness coming in, and not trying to be the pioneer. We talked about the difference between, trying to catch that edge or get in on the move. And the smart money, okay, the smart traders were waiting for that break to show that the move was going to be a break to the IB low. We still had that 90 right up until, okay, 3 o'clock. We still had the probability of 97% of breaking the IB high or the IB low, and we were still trading at the midpoint. So it was impossible to know which way we were going to break until we broke that fractal low. And then after that, it was pretty clear that they were going to take this down and try to get back inside of the prior day range. But it was, I got out a little bit early. I took my trade off at 62 because I didn't think we'd see much more extension, but I could have got a little bit more on it. But that doesn't matter because it was a safe, high probability trade. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.